You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris.
Great to be back, Jim.
You were recalling just a while back, people thought China would cut back on the buying of gold. Last year, they literally snapped up every physical piece of gold on this planet. And what's happening this year? Are they cutting back on their gold purchases?
No, actually, it's anything but. Everyone is still saying, China's going to cut back on their gold purchases. And just in February, which the numbers came out, 1 or 2 weeks ago, imports jumped 30% to just over 109 tons. And if you combine that with January, which was something like 80-something tons. Anyway, the total for the year has been 193 tons. And that's a 140% increase over last year. I mean, some slowdown, that is. And, especially you have to consider that January is usually a lot bigger than February because of the Chinese New Year. And they buy most of their gold in December, January. And you would expect the January numbers to be ahead of February mostly every year. And, it's almost crazy to see it this much higher, 30% more than the previous month. So, it's good for physical gold, although that's not being reflected in the prices. But as most people know, it's a paper price, not the physical price. And sooner or later, the market always wins out.
What happens on the day when people ask to have their gold certificates honored and they want a little piece of that bright, precious metal?
Yeah, there's going to be a collapse in the paper market because they won't be able to deliver anything if people need it, and they'll be forced to sell in cash. And at that point, it'll lose all its credibility and possibly for all other commodities. So, this is good for the gold market, even though, like I said, the price action hasn't been that great of late.
But it did have a really nice, quick climb.
Yeah. I mean, it's still up, I think, 8% for the year.
And is there any explanation why silver is doing so poorly compared to gold? Usually they march in step.
Yeah, usually when they're doing bad, silver does worse than gold, and the gold to silver ratio climbs. And when their gold and silver are doing well, silver tends to outperform gold and cause a contraction of the gold to silver ratio. So, it's not outrageous to see silver underperforming or anything like that at this point, just because, we're still at very low levels of where gold should be in terms of market clearing levels, which is obviously not the price point right now. Just look at the Chinese and the Indians. Plus, there's weekly sales records out of the U.S. Mint. I mean, that's been ongoing for quite a while. So it's obviously a paper game, and sooner or later here we're going to see the physical market overtake the paper markets.
Maybe they're buying a lot of gold in China because all the people who stockpiled copper have found out maybe copper isn't the best thing to stockpile.
Yeah, and, they have such a high savings rate, and their governments even encourage their citizens to buy gold. And, it makes me think that at some point in time, they're going to have either commodity-backed, like bimetallic gold and silver, or maybe just a gold standard. It might not back all of the reserves, but it'll back some portion of the money supply. Because they see the fiat experiment around the world has failed yet again.
Can you maybe explain?
The average life of a fiat currency is only 34 to 37 years. And if you look just last century, we had roughly 50 hyperinflations because of fiat money. And before that, there weren't any except for the French assignat when they tried paper money out. So every instance of it has resulted in a currency collapse. And, why would anything be different? I mean, it's a faith-based monetary unit, and most government officials only care about achieving their short-term goals while they're in office, and they don't care how much reckless deficit spending, money printing they have to do. I mean, it's because it won't be, they won't have to deal with it. It'll just be, felt by people in the future. Kind of like Social Security, when it was initially established, everyone loved it. And the first benefactors that have already received it and are receiving it now are, benefiting. But, for example, I won't ever see a dime.
And the original people never contributed a dime either. The taxpayers picked it up directly.
Yeah, it's a Ponzi scheme at this point. It's just, although they do have small amounts in these, I forgot what they're called. They have like 3 trusts, basically, and there's such small amount. I mean, it's crazy how they, for example, put Bernie Madoff in jail for running a Ponzi scheme, yet they're doing the same thing, but nothing happens to them because they're government.
Chris, it says consumer confidence is up in the United States, yet Janet Yellen, the new chair of the Fed, didn't look all that confident the last time she gave a speech.
No, I don't think she is, because, the unemployment rate is trending down, but she actually acknowledges that the labor participation rate is doing the same, so the labor market's actually not improving. So, everyone thinks that we're in a recovery, and they have since 2010 or so. But, you have to understand how an economy could go right before you can understand how it could go wrong in terms of the policies they're enacting, aren't ones that foster economic growth. We need high interest rates, as the market would provide, because there's a high demand for money. High savings rates would cause real capital formation, that is, capital that would be invested in various industries, and over time create real jobs, not these make-work jobs that the government has provided that really don't add anything. They're just basically one person digging a ditch and the other person being paid to fill it back up.
Well, why don't they put a pipeline in the meantime?
Yeah, that's a good one. I mean, there's just so many problems, and what has become just an incredibly bureaucratic government that, I don't see any way out of things, ever getting better, really, unless, there's a major change or some type of revolution.
Are they trying to distract us with that crisis in the Ukraine?
Oh, I definitely think so. They have before with other instances. And, I think they also try to do that with the weather. I mean, when everything was adjusted for the government shutdown, nothing has gotten better since last summer, which, I specifically said it wouldn't because there aren't those policies in place to cause that. And they're doing the same thing, except less liquidity is being pumped into the market, but it's still a lot of liquidity. So it'll be interesting to see what the fiscal situation is if they actually do indeed raise the Fed funds rate, which would cause the yield curve to steepen, and the 10-year, which has most of their debt payments based on, would go out of control if the 10-year went to just 6%, which isn't even that high. So they're stuck between a rock and a hard place, keeping interest rates down, because interest rates that are too high will cause a problem in the fiscal arena, and therefore cause problems in the monetary sphere. So, they're going to have to make some hard decisions if they want things to actually get better, and history has shown us that they never are willing to do that.
Getting to metals, palladium, big darling, but other people are saying if you want a long running horse, go for gold.
Yeah, I agree with that, gold and silver, although palladium's certainly a good investment here, a good trade that we've been saying is go on palladium and short platinum, because the majority of both are used for catalytic converters, and they're interchangeable, so it would make sense that more palladium will be used than platinum on a forward-looking basis because it's cheaper. And there's more of a supply issue with palladium because it's a lot more rare than platinum. But you're correct, gold and silver, I think, are the best two commodities you can buy, precisely because of what's going on, not only here, but in the EU and other parts of the world. South America, they have just rampant inflation everywhere. So, but they're also the most manipulated because it kind of discredits the U.S. dollar when gold reaches levels like 1700, 1800, 1900 like it has in the past.
What about the people who say the U.S. dollar has a limited life, that within a few years it's going to be replaced by something, but what would replace it?
If anything, it would be the RMB, the Chinese yuan, assuming that it becomes fully convertible fairly soon, and they back it. I think they're going to back it by gold, at least to some degree. And, it would make sense. They're the upcoming superpower. I mean, they'll surpass us in 2016 in terms of economic growth. So if anything, why should the U.S. dollar remain the reserve currency? I mean, we've obviously abused it to the point where it can't be abused anymore. So, and each country is starting to realize this by doing trades that are not denominated in U.S. dollars.
A lot of Russia's trade is that way. They just do a swap. They barter.
Yeah, and I'm sure that will...
But how do you pay bills with bartered stuff? I guess you sell that.
Yeah, I mean, it'll be interesting to see, but I have the feeling either the Chinese will come out with a basket of currencies or a gold standard of some sort, and that replaces the reserve currency in the U.S. dollar. I mean, how confident can people be with the U.S. dollar? Look at how much debt we have, and it just keeps growing and growing, and there's no sign of it slowing down at any point in the future.
The Canadian government claims it's going to give us a balanced budget next year, just in time before the next election. What a coincidence.
Yeah, that's odd. That's odd timing.
Thanks a lot for talking to us, Chris.
My pleasure.
My guest has been Chris Marchese, mining analyst for the Morgan Report. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can forward comments to info@HowStreet.com. I'm Jim Goddard.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.